Well, good evening, folks. Welcome back to the channel. So I've gotten several requests to talk about three of these funds more. Obviously, they're very popular. So I'm going to try to do a comparison today. And the first idea that I had for this isn't quite going to work because what I was going to do is compare these funds in a bull market versus a bear market. One of these funds is actually brand new. It's only like 3 months old. And the other two are about 10 years old. So we haven't really seen a significant bear market aside from this year. So we can kind of look at that as a case in point. But like in the example of SPHD, that's been around for almost 10 years. So for maybe one of those 10 years, we've seen a bearish scenario, but 9 of those 10 has been a bullish scenario. So it's not going to be quite an apples to apples comparison. But what I want to start off with when you are picking funds like this, I'm going to go over like what I look at. And I think, that might be helpful for other people in deciding what they may look at. But for me, for these funds, like I look at these covered call ETF funds and these high yield funds, these ETFs, high yield ETFs as dividend plays. So I don't put a lot of my portfolio in them, but what I do put in, I'm putting it in mainly for the dividend. So what I'm hoping for is mainly for the fund to at least stay at the same principal value, but to churn out these lofty dividends. So I went starting with QYLD and I looked for the last 5 years, and I don't think it's ever missed a monthly dividend payout for the last 5 years, going all the way back to August 2017. The only month I see missed is October 2017, but you can look November, December, January. You can see through 2018, not a single month missed. And the dividend fluctuates a lot between 25 cents a month and 17 cents in this case. But if we look here, I mean, there's like not a single month missed in a dividend payout during the pandemic, which is quite phenomenal. So, and it has fluctuated. I mean, one month last year it was a 50-cent dividend at the end of 2021. So that was like icing on the cake. But what I did, so I put together, or I started putting together a spreadsheet here, and I had basically the dividend yields for each of these three QYLDs hovering around 12%. The starting price of this fund started December 2013 at 25.50, and currently it's trading at $18.47, whereas SPHD is a 3.91% dividend. And the fund has gone up in value. So this makes an interesting comparison because in one, you're seeing a lofty dividend, but you've seen the fund drop $7 over almost 10 years, which is not that bad, I guess, but the fund hasn't appreciated in value. And on the other hand, you're getting a 4% dividend, but the fund has almost doubled in value. So this is a very enticing difference here. And this is actually good. This is actually a good case study for discussion. And then JEPQ, of course, another very popular one that just started, 15.75% payout, and it's gone up in value so far. But again, there's not enough like sample data to really make a judgment call on it because it just started out. Like we don't even know if this dividend is going to stay at 15.75%. But this SPHD is actually very intriguing because that's pretty good, like over a 10-year time frame to be paying out this kind of a dividend and to go up that much. So let's go look at that one now. So if we, because I'm on QYLD here, so if I type in SPHD, this is the Invesco S&P 500 high dividend, low volatility ETF. So this is probably less risky, less volatility. And if we go to the maximum here, the inception date was October 18th, 2012. And this was at $44. Wait a second. Oh, this didn't do what I thought. $24, December 2012. Gone up pretty consistently. It's really done nothing but go up. And then right before the pandemic, and then it dropped to like $30 and then started coming back, then roared back from October 2020 to May 2021. And it's really back to its price stability. You could actually factor out like the pandemic, like you could just kind of put your index finger over that spot there and you could draw a line, a trend line, and it's almost trending straight up. So now let me go to historical data because I still like the QYLD dividend. And what my answer is going to be as an early preview, I'd probably pick both of them. Like when I can't make a perfect decision on two things, I pick both. That's my answer, honestly. But let's look. So if we go out here all the way to, let's max out October 2012. This is just historical prices. I want dividends. So let's see if this has ever missed a dividend. And let's check the payout because this is obviously more expensive than the QYLD. But see, the QYLD is not performing quite as well because of the bear market and because the covered call premiums that it sells are also dropping as the price of the underlying stocks on the NASDAQ 100 drop. But these are starting to come back. So I think we're going to see QYLD come back. So the dividend here, here's the thing. Okay, for a fund that's twice the cost, the dividends are like 14 cents every month. So this is a monthly, well, let's see, they missed September 2021, January, February, March. Okay, since then they haven't missed a month. But we can factor out if they miss just 1 month at a time here and there, we can factor that out. Let's go back to, let's see, 2020. Okay, so the dividend yield has been pretty consistent this whole time. Actually, it's increased a bit from like 2014, and we've got a very robust size of sample data here. So let's see, we were at 2017, 10 cents, 15 cents, 14. It seems like it stayed consistently around. Let's do this here. I can actually copy this and paste this into Excel. So I'm going to take this and then I'll be able to do an average here real quick. What this has averaged out. So let's copy it and then we'll go to Excel and we will paste it over here. And let's see. So we're going to go all the way back to, oh, you know what? Darn it. I don't know if I'm going to have time to fix this. I know what happened, but I need to like split this out. Let me see if there's a quick way I can do this. I need to take out the word dividend. I may just do this in a next video if I can't split this out quickly. There is a way to like, I can't believe that came over like that. Hang on a second. Let me see if I can go back and copy it again. Actually, it's not gonna, yeah, it's gonna take the word dividend. Oh well, but anyway, I'll go more in depth in a future video. I'm not gonna spend this video while I'm recording trying to go through that right now, but that is a nice consistent dividend and the fund has appreciated. So I could certainly see the appeal, but let's go back to QYLD again. These are our two that's kind of like our apples to apples or as close as we can get comparison. And then I'm going to look at JEPQ again and say some more words on that. So QYLD 2536 dropped in 2018. It was about the same price. And then it dropped, that got back to 24 before the pandemic, came back to like 23, hovered around 22 or 23 until the bear market. So if this gets back to 23 or 25, this would basically be flat over the whole time, but it's churned out a tremendous payout. So factoring that in, I think that's okay. Like, I think that I'm okay holding that as a piece of my portfolio to pay out that dividend that can then fuel my ability to buy other stuff. So that's my take on those two. I would own them both, but I think if I had to flip a coin, I'd prefer the higher payout. That's just me. And then JEPQ, this one actually kind of has the best of both worlds right now because it's gone up since inception. And the dividend is 15.75% so far. So it's showing from May 4th. Well, it's 49, so maybe it's flat. Oh, I was taking the 52-week range. The 52-week low is 43.60. 52-week high is 51.18. See, because it dipped in June to 43.85, but then it's come back since then. So, the heck is this? So it's stayed flat basically so far, but I like the payout on it. I think we only have like a month of sample data. We'll have to see if it's paid out the next one again. Oh, come on, Yahoo. Okay, dividends only. Let's see. Dividends only. Let's just go to maximum. And then, because I'm not sure if this is monthly or quarterly. Actually, it is monthly. Ooh, and the dividend went up. Look at this. It was 37.6 in June, 34 cents in July, 40.7 in August. So it's going up. So this one, keep an eye on it. I really like this one a lot. But for now, that's pretty much that's pretty much all I had to say on those three for now. I'm going to come out with another video where I actually have the dividend data and crunch that. I'll crunch those numbers. I'll do the average, and I'll have some more in-depth information. That'll be like a sequel to this video. So keep an eye out for that maybe later in the week, maybe tomorrow or Tuesday. But with that being said, thanks for watching. Please remember to like, comment, and subscribe. Thanks so much, and take care.